What's up, guys? Just going to go through the case study that I took on the EU sell from the 4th of March, so last week. Taking me a little bit of a little while to get around to doing this. So I do apologize for the delay in it, but we'll get straight into it, obviously. Looking at it at the time, we had just swept our 4-hour external low. Obviously, really, really strong inducement. Hourly, we're at the bottom, and that was our 15-minute at the same time as well. So we had everything was just bearish after taking our daily high. So, lots of bearish momentum, as we can especially see really inside of this whole leg here. It was very, very bearish down to the inducement of this point, which obviously isn't ideal. But what we started to get on the 15-minute was starting to show signs of potentially buying, but also obviously continuation sells. So what we had there's our break of structure just here on the 4-hour. Now, what I was looking at was I was actually looking to use the high as a medium inducement, given that it was I actually had it as retest of the 4-hour break. So the reason that I had it as retest, I had it as internal retest, obviously not external. So we've come up, we've broken this high here. This break to the downside and the fact that the low pushed beyond the point of the break allowed me to use this as a retest. I want to be working when I'm using internal retest. I really like to see the point come beyond the area of the break, so it comes back out of the range. Not just sitting, inside of it. Like if that had a broken to the downside here and then pushed up, I wouldn't be considering that as internal retest. Like I'd be looking at that as an inducement of this retest and then obviously a continuation, rather than coming beyond the break into the downside and generating that liquidity confirms this for me as internal retest. So although we've got 2 breaks of structure, because I could look at this as potentially being retest, I was happy to sell off of it. Typically speaking, I wouldn't be selling off an area like this just because it is starting to go against the internal momentum. I'm selling at a break of structure rather than an inducement. Because of the context here, we could actually treat that as an inducement rather than a break of structure, which was quite nice. Now, having a look at the actual internal range. So, yes, we can validate selling from here, but we also need to be able to see the other side of the market and understand, okay, cool. Where's the market going to buy from? How is this going to shape up? Where do I need to be targeting? Where do I need to be careful of? And all those sorts of different bits and pieces. So, if we look at this as an internal range, right? Even looking at this as an internal range, because we've got break, retest, decisional, inducement of decisional, break. What we have is a validated range, as we've got an extreme, we've got a decisional, and we've got a break following along with another break after an inducement, right? So we can start to validate this range here. So if the market's going to buy, it'll either buy from somewhere down inside of here, there's probably like a 5-minute point, or it'll buy off the mitigation of that area there, which is of course the decisional. Now, one thing else that I will add to this about this inducement here, why I was so confident in that being an inducement, was because of the sellers that the market had brought in from there. So not only is it a retest point, but we can see this break to the downside here. Lots and lots of people selling because of that break of structure, or you could also consider it because of this break of structure here. Lots of people selling out of this area. And one of the ways that we can know that there was lots of people selling here is due to this reaction, which formed the decisional. But due to that reaction there, you even get a little internal break just there too. So we're getting a lot of people selling inside of here, which we're just taking out of the market. So we've got lots of people now buying because they're flipping their bias because they've been taken out of their sell. But also as well, we've taken a lot of liquidity from the market by inducing all of these sellers. So sitting in a really, really good spot. But just understanding that the market can buy from here, it is a valid decisional area. It's a supply to demand that took liquidity after a decisional sweep into a break of structure. So very valid decisional area. Now, even at this point is going to be a smart money trap. We've got to remember it will induce something. So if we don't get anything between here and here, that's of significance for it to induce. Yeah, we got to understand that this area may come up and actually induce the high to then end up doing something like that. So something to bear in mind with this sort of setup and these types of trades. Just going to bring it back a little bit here. We'll jump on the 5 minute and then we'll go to the 1 minute shortly and go through the actual entry. Now, looking at the area, so I actually had a refined smart money trap for the area itself. You can use this area as a smart money trap, very, very valid too. And it is potentially going to be a smart money trap, just given that it didn't sweep any liquidity. And also as well, obviously, we've had that medium inducement with no medium inducement into this area. But I refined it just because I was actually looking at just seeing where the market was reacting from initially. As soon as we took this high, we started to get a bit of a reaction. So I'll just drop down to the 3 minute and just show it ever so slightly. So down inside of here, actually, I'll drop down to the 2 minute maybe. It's on the 1 minute. Right, yeah. So we had this area here, which the market came into straight away after sweeping this high and started to get a bit of a push. So that was telling me that I want to be using this area because I want to be monitoring what the market is doing. It is also a supply to demand area. But yeah, more so just wanting to monitor what the market's doing out of this area, given that it's reacting from this straight after taking that high there. So looking at the trade itself in terms of break-even points, you can go break-even when you mitigate here, or you can hold through that area. I held through the area just because of the fact that it really shouldn't hold against this momentum. So yeah, just holding through that and waiting for the market to induce something of a bit more significance before running a break even. You can actually hold past this as well for your break even, but the reaction that I got, I didn't need to. Cool. Premium guys, I'll drop down here for the 1 minute now as well. Like I was obviously explaining, we're at break even by now at this point here, and then yeah, trade played out quite fast. TP was spot on. Obviously pushed through. You do have the 15-minute area here, which is just there. I don't think it would have made much difference. Extra 0.3R. I had it set at the hourly point. So if I jump out to the hourly, you see. So I had it set at the hourly point just there. But yeah, so, like I was explaining, the market can, if we don't generate anything inside of here for it to induce, it very well can push from here to bring in the buyers, potentially, form something like this, mitigate, and then sell. But yeah, just not wanting to hold through that area because it is a point of significance. Pretty sure it ends up selling after that too. Maybe pushes higher. Remember. Can I just remember? Let's have a quick look. Yeah, cool. So there you go. So like I was explaining, this area here, pushing the market up to be able to bring in the buyers to then sell off. Obviously, that's what we ended up getting. But yeah, hopefully that trade makes sense, guys. Anyone that's watching on YouTube, feel free to comment in the comment section if you've got any questions, and I'll go through them. Guys in the premium group, of course, fire away. If you've got any questions on that, about the context or any of those sorts of bits and pieces. Remember, context is key when it comes to everything with trading. So, just make sure your context actually makes sense and that your confirmations align with the context of the trade, because the confirmation isn't valid if the context doesn't make sense. So, sweet guys, hope you learned something. I'll speak to you all soon.